traders and friends, thank you so much for joining me on this Wednesday afternoon. What another interesting day we have seen unfold in the US markets. A bit of a wild day. We were down, we were up, we were down, we were back up once again. This is all, of course, in reference to the big macroeconomic news today. The GDP figure, which was announced for the first quarter of 2015. As you can see, it came in at a 0.2% reading. It is one of the lowest actual readings we have seen in quite some time. A little bit worrying for the overall markets. I do not think, however, it has come as too much of a surprise. As you can see, if we have a look at the Dow Jones Industrial Average, we haven't been trending. It's not as if these markets or the three US equity markets have been trending higher. In fact, since the beginning of this year, going back to the 1st of January 2015, we have essentially been range bound. We've been between resistance and above varying levels of support. We are stalling out. The actual movement in the equity prices, you can see for the past 6 months, has been more or less sideways. So to go in and say, well, look, GDP has been somewhat of a surprise, I believe it's really been reflected in the overall nature of the trading activity taking place for the year of 2015 and even the end of 2014. If we drill down into the daily price action today, we have almost another hangman type of candlestick. As I just suggested earlier, we sold off intraday. At the end, we sort of came back up. There is a little bit of sustained buying pressure. We haven't broken out above resistance. We haven't broken out or down below. Out of this symmetrical triangle, we're still 100% neutral on these markets until we see clear commitment one direction or another. I keep saying it. You have to be very cautious and also very neutral in the overall market. You can see right here on the S&P, we're failing to break above resistance, and we've got the two hangman candlesticks, and we are still technically within this symmetrical triangle. The only exception to this at the moment is the Nasdaq. The Nasdaq has seen a little bit of a high wave spinning top yesterday, and today we have more or less, a close relative, just a normal spinning top, or even almost a doji candlestick as at Wednesday. It is reflecting indecision. We are at a very important pivot point. We are at a resistance turn support level. Very interested to see if these markets can hold these levels, especially the Nasdaq. I said over the weekend, I feel as though how Apple goes, so will the markets, and it's been on par to a degree so far. I mean, Apple has come out, it's reported its earnings, very bad, ominous type of candle, which was set up yesterday. We have seen a little bit of commitment to the downside. We haven't seen complete capitulation, or we haven't seen, a commitment to the downside yet. Anything material to speak of, but the market is still trying to hang on, and it's really shown up in regards to Apple as well. A lot of individual trades which have set up this week, in which we're doing quite well in. Silver today had a little bit of a breather. We were down 7 cents. It had a nice little gap up, but since our entry here at 15.44, it's been quite a nice little trade on silver. We have a target up here at $16.12. Personally, I'm leaving my stop down here at the low of Monday's candlestick. This ETF likes to gap. Obviously, it has a lot of 24-hour suspension gaps, but as long as you pick the overall direction right, it's going to reward you. So it wouldn't surprise me at all to see silver even gap down a little bit, but then gap up, over the coming days. So just make sure you have enough room on that stop placement on silver. Make sure you put your target in, because that is very, very important for the silver trade. Amazon today, quite a mixed day. I mean, it was down. It closed down 9 cents. The candle is what we call a shooting star. It has got, or it still continues to have bearish vibes to it. This really looks as though this is an exhaustion gap, unfortunately, for Amazon at the moment. I mean, as long as we keep pushing lower, it may be a little bit ugly over the coming days, but this has really got, again, a lot of negative sentiment, or immediate negative sentiment, after the very optimistic gap up post earnings. Pay attention to this. At the moment, you've got decisions. You can place your stop up here at 448. You can move it down to 439, or you can even put it above the high of today's candlestick if you really want to lock in marginal profit, or at least a risk-free type of trade. In regards to Amazon, Boeing Airlines hasn't broken down yet. It's on the verge of doing so. I'd really like to see, I guess, correlation between the Boeing Airlines trade and the overall markets. The same with a lot of these individual trades also. What I mean by that is the markets are still very neutral. We haven't got that clear breakout, either higher or lower. We have trades that are both moving higher. We've got trades which are both moving lower. It is representing the mixed nature of the overall market. But when this market decides to break, a lot of stocks are going to follow that direction. So it's smart to have, again, open contingent orders in your account. Just be mindful, however, that until these markets break, it's very, I guess, neutral in the overall market behavior and the overall market direction, which could, of course, happen later in the week or maybe even next week. We are getting sooner to that definitive break. Baidu, not doing a whole lot essentially at the moment. I mean, quite flat at the moment. We've got I believe earnings released later this week. It's still not out yet. The big move today was GoPro, which I'll soon get to. Caterpillar is on the verge of breaking out above some interesting type of levels. Personally, I'm not in this yet. I will jump into it tomorrow if it continues high. If you are in this trade at the moment, you can place your stop below today's candle or even below the candlestick on Tuesday. That's a very smart location to place your stop on that particular trade. CVX has got earnings coming out released on Friday, so no trade on that. Facebook is on the verge of breaking down. I really wanted to see a close and a continuation before legging into Facebook. We haven't seen a close below that trigger yet. We've seen intraday movements and pushes higher. My only hesitance with this is that in the past, when you get to these really clear inflection points are what we call when we get to, like the neckline of a double top, something like that. It can sort of stall out, much like GDP growth at the moment, and then sort of reverse on you. So if you're in Facebook at the moment, it's a nice little trade setup. Place your stop above today's candle or even above the high of Tuesday's candle. It's a very smart location, once again, to place your stop. We've got some very nice targets on Facebook moving forward. I'll keep you updated on the progress of that individual trade. Google at the moment is filling the gap. I cannot give you any more detail on Google. I'm very neutral on that particular stock. The big news at the moment is GoPro. There is a video up in the private area referencing this type of earnings play, a very nice type of a trade going on at the moment, a very clear type of gap also, which is exciting to see. One of the stocks so far since earnings, which has given us a really nice tradable gap. So I'm excited about that particular stock. But I'll jump into Goldman Sachs soon. This is the one stock so far which has been a losing trade. Unfortunately, that's okay. I'll finish off with IBM. We'll move into IBM first, and then we'll come back and finish with Goldman Sachs. IBM's pushing higher since getting in at above 172. We're very close to our target. Our target on this particular stock, even though we're trading options, is still up here at the top of the gap. So we're looking at a 175, 176 type of target. The target is still the same as that level we spoke about over the weekend in that pro analysis recording. So please just keep in mind that level. You can place your stop below Tuesday's candle. That's a very good location to place your stop. Anything below today's candle or immediately below is a little bit risky in the way of, possibly getting stopped out prematurely for a break even when you could have a very nice profitable trade like it is showing at the moment. So just be patient on IBM. We still haven't broken down in the markets. We haven't broken out. And again, it's just reflecting that mixed type of market nature and behavior, which we are currently finding ourselves in. I'm very neutral once again on Netflix. This is something which I forgot to reference. Netflix is still 100% neutral. I'm very much excited about that Netflix trade. Now, getting into Goldman Sachs, the reason why I want to stress the importance of this trade is because we're still not, at the moment it is representing a loss, but I'm still convinced that this has still got a lot of downside movement in the foreseeable future. Whether or not it bounces up a little bit higher and then it flakes and fails, only time will tell. But at the moment, you've got a decision. You can place your stop right above this particular candlestick. Going back to Thursday, it is about $4 or $5 of risk since our entry price. But based on risk and reward ratios and the actual trade setup itself, it was a smart trade to place. Yesterday, we saw what we call a hammer. And today we've got what we call a bullish engulfing. So these are two bullish candlesticks at a support level, which makes sense. Again, the market hasn't rolled over and we still are holding above the 10 and the 20. Very neutral in this individual stock. All you can do is mitigate risk. Place your stop either above today's candle or above the candlestick going back to Thursday last week. And just let Goldman Sachs run its course. If you took on a very small position, you could even place your stop above the high going back to Thursday 2 weeks ago. That's the best absolute type of stop on this trade. I understand though that it is a little bit of risk from 195 up to about 202. It comes in at about $6 to $7 of risk essentially on that trade, but it's a much nicer type of position if you structured your trade up correctly. Outside of that, ladies and gentlemen, email me if you have any questions whatsoever. success@pivotpoint-trading.com. Have a great Wednesday evening, everybody. I'll see you all Thursday for another market recap. All the best. Goodbye.